హలో వెల్కమ్ టు టీవీ ఏషియా తెలుగు టాక్ షో విత్ ఎక్స్పర్ట్స్. మరి ఈ వారం కూడా టాక్ షో విత్ ఎక్స్పర్ట్ మరి ఒక సరికొత్త ట్యాక్స్ ప్లానింగ్ టాపిక్ తోటి మన ముందుకు వచ్చేసిందండి. మరి ఏమాత్రం లేట్ చేయకుండా మనం స్టార్ట్ చేసేద్దాం ప్రోగ్రామ్ ని. అనిల్ గ్రంథి గారు కూడా మన షోలో రెడీగా ఉన్నారు. అనిల్ గారు, వెల్కమ్ టు ద షో అండి. హౌ ఆర్ యూ?
థ్యాంక్ యూ అండి, థ్యాంక్ యూ వెరీ మచ్.
థ్యాంక్స్ ఫర్ కమింగ్ టు ద షో అండి. సో మనకి అనిల్ గారి గురించి మనందరికీ చాలా 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 బాగా తెలుసు, బికాస్ వీఆర్ వాచింగ్ హిమ్ ఫ్రమ్ లాంగ్ టైమ్ అండ్ వీ నో హిస్ ఎక్స్పర్టైజ్ ఆల్సో. బట్ ఎవరైనా కొత్తగా యాడ్ అయి ఉంటే ఐ జస్ట్ వాంట్ టు put up some words about his expertise. He has 15+ years of experience in finance profession as finance controller, CFO, and he holds other senior executive positions in organizations like Amazon, Starbucks, PwC, and Sun Edison. He is helping his clients take advantage of tax planning opportunities and strategically setting up the clients' businesses for success. He has a wonderful team of CPAs, chartered accountants, and other financial professionals. Please feel free to reach out AG FinTax for all your tax planning needs and suggestions. Thank you so much, Anil Garu. Welcome to the show and hope you are ready for the show.
Yes, Lakshmi Garu. Before getting into the topic, I hope you are having great time with Thanksgiving holidays.
Yes, Andy. Okay, today's topic is year-end individual tax planning, Andy. So last sessions lo we discussed about business tax planning. So heroes mano let us discuss about individual tax planning, and since this is we can say this is need of the hour, because everybody has to plan their taxes, because near almost 2020 is over, right? So definitely this is a lot more informative session, Andy. Please don't miss it. And if at all, if you missed any of the previous sessions, please log into TVASIA Telugu channels. Like TVASIA is available in WorldBBTV, Dish Network, YouTube, and Facebook page, and TVASIA Telugu website is also there. So please log into one of these channels whenever you have some time, and please don't miss any of these sessions. Okay, Anil Garu, let's start it, Andy.
Sure.
Last week, we did the show on year-end tax planning for small business owners, as I just said. So similar to business owners, do individuals also have the scope for tax planning, Andy?
Sure, Andy. Yes, of course it has. But compared to the business owners, opportunities might not be so great or not so many, but still for individuals also there is an opportunity, there is a scope for tax planning, Andy. So everyone believes that they need to think about the taxes at the time of filing tax return, which is in the month of April 15th timeline. But we always see that people who ever proactively take required steps before December 31st will definitely reduce potential tax burden, and I see a lot of great refunds also, because they take active steps before December 31st. There are some opportunities which you should do it before December 31st, so that we can save taxes.
Okay. Yeah, I totally agree with you, Andy, because tax year ends by December 31st. If there are any necessary steps or any necessary plans or anything that they have to do, any transactions, I can say. So I think they have to finish it by December 31st, right, Andy?
Yes, sir, you are right, correct. I mean, not everything. There are some opportunities are available if you can plan. Yes, there.
Yeah, but I think I don't know. Correct me if I'm not wrong. At least 95% of the things has to be completed before.
Exactly correct. You are right. Yes, correct.
Okay, so what are the benefits of year-end tax planning for individuals, Andy?
So at high level, if I talk about what are the benefits, why do you want to why do we need to do the tax planning? So the first benefit is, in a way, you reduce your tax payments. So when you reduce your tax payments, and you are investing this money in somewhere else, so that you are building your wealth over the time, and you are making your funds more funds available. You are making it for your retirement, and you would be also reducing your estate taxes by doing some proper planning, and this savings will help you or may help you on child's education also, cost of child's education. And overall you will have a better cash flow management if you can plan appropriately. Rather than paying to the IRS, keep the money with you. You can plan, you can do a lot of planning, and you can have a better future cash flow situation.
Nice, Andy. Very interesting, Andy. So before we proceed deeper, please mention the basics of tax planning that individuals should know.
This is when we talk about the basics, okay, every person is responsible or obligated to pay taxes for their earned income. If they make a money, they need to pay taxes. And there is an obligation, as per IRS rules, there is an obligation on every individual. So when we think about, if even I make some bank interest of maybe some $100 on top of my salaries, my annual salaries, so then definitely I need to pay taxes. So whenever you make money, you are obligated to pay taxes. So the tax rates are given, there are two different types of taxes: federal taxes, state taxes, and there may be some city taxes also for some states, for some cities. So when you want to derive what is my tax rate, you need to add state and federal to derive what is your tax rate. So those are the very basics. Whatever money you make, you need to pay the taxes.
Okay. So what are the tax rates, Andy? మీరు ఇప్పుడు mention చేసినట్టు.
Yeah. So the tax rates varies from 12%, I shall say 10% to 37%, based on what income level you are. And it also plays a key role whether you are filing a married filing, or it's an individual tax return, or married filing joint tax return. Because the income threshold limits will change for the tax rates. An example, if your income is more than $518,400 for an individual, you are at the highest tax bracket, which is 37%. And if you are a married filing joint, it's a $622,050. So then you are at a very highest 37%. So you always need to think about my tax rate is 10 to 37%.
So minimum is 10%.
Yes.
Okay. So how important is it for an individual's tax filing status while filing status while filing the tax rate?
Filing status is very important. Why I'm specifically mentioning here is filing status will decide how much taxes you need, how much taxes will be withheld when you take a W-2 salary. I know many cases I see that individuals, when they are submitting form W-4 with an employer, where they talk about what should be their withholding taxes. In that form, people do give a wrong filing status. If even they are filing a married filing jointly, they might have done individually, or married filing separately, or household, or there are different filing status, which I'm not going through this. Just only I want to ensure that I want to tell the viewers, maintain your filing status at all the places, you maintain the same level. Otherwise, there may be higher withholding taxes will happen, or lower withholding taxes may happen, which may result in paying some additional taxes at the additional cash outflow. Additional tax payment cash outflow may happen at the end of the year when you're filing your tax returns. So just be cautious when you're updating your W-4, or please open your W-4 in which you submitted already with your employer, and ensure that the filing status is appropriate.
Okay. Yeah. So we hear a lot about standard and itemized deductions. I think there are two types of deductions we always hear about. So what are they?
Okay. So as you mentioned, there are two types of. This is a very basics one, but there may be some very young or people who just moved to US might be viewing this live show. So that's why we are covering the very basics also here. There are two types of deductions: itemized, standard, and itemized. So there are given numbers like up to $12,400 if you are filing single, or $24,800 if you are filing married filing jointly. So, or if you are head of household, it's $18,650. So what does it is? Whatever income you make, you get a standard deduction from your income. So you don't need to pay taxes on this amount. It can be $12,400 or it can be $24,800. And when you go, if you think that you can, your expenses are exceeding the standard deduction amount, then you can go for itemized deduction.
So you just mentioned that if it is more than standard deduction, or expenses are more than standard deduction, then we can itemize, right? So
Yes.
Can you please explain more about it, and when can we itemize?
Sure. As I said, there are limits, like there are different elements we have which we need to, okay. IRS has given different set of expenses, and when you combine all those expenses, if the actual expenses are more than $24,400, then you can go for itemized deductions. So what is the advantage of going for this itemized deductions? Because if you can go for itemized deduction, you will get more deductions and your tax liability will go down, which will save you some taxes.
Okay. So what qualifies the client for itemized deduction?
Okay. Again, as I mentioned just now, there are different parameters, there are different elements we need to look into that to qualify for the itemized. So there are some expenses like how much sales tax you are paying, how much real estate taxes you are paying, how much personal property taxes you are paying, mortgage interest, disaster losses, if there are any natural disasters and there are any losses, or if there are any charitable contributions you make. If you think all these expenses together, if it exceeds the standard deduction, which is $24,800 or $12,400, so then you are qualified for itemized deductions.
Oh, okay. So what are the individual tax planning strategies, Andy? So meer cheppe strategies enti?
Yeah. So I want to start with first one is deferring taxes. So when I look into the tax planning, there are always some opportunities you may be having to defer your tax payments. So like if you claim more deductions this year, you obviously the expense your deductions are, when your deductions goes up, your tax liability will go down and you will be paying lesser taxes. But it doesn't mean that you are escaping from the taxes. You are only deferring. So you are, instead of paying this year, so just you are moving some, you are claiming more expenses and you are deferring to the next year the tax payments.
Okay. So that is one of the strategies that you can defer your income.
Yes, correct. I mean, there are some deductions. It's like there are deductions. In other words, in simple terms, if I defer the taxes from this year to the next year, this tax liability with the tax payment, instead of paying to the IRS, you could have invested somewhere else. You could have an extra dollar from that. Yes. And next year, you will be paying the taxes to that.
Okay. Yeah, that makes sense, Andy, definitely. So please explain what is the deferring taxes means.
Okay. As I mentioned, accelerating deductions will result in deferring the taxes. Okay. Like this is more specific to self-employment people. Okay, like example, because I know many viewers are individual IT consultants, or you might be a real estate agent, or you may be a financial advisor, or you may be working as an employee where you have some opportunities to take to take decisions on bonus. So in simple terms, if you defer your income instead of billing to someone, like example, you are an IT consultant, you are working for a company. Instead of raising an invoice this month, in the month of December, you can do the income, you can defer the income to the next year by deferring it. So if you don't raise the invoice, you will not getting any income for that. I mean, you will not receive any cash for the invoice. So you are deferring your income. In the other word, in some other cases, deferring taxes is also because of accelerating deductions. Like example, you are planning to give a bonus to your employees. And instead of giving the bonus in the next year, you can give the bonus this year, so that those will be an expense for your company. If you're an individual, or if you're self-employed, if you're a self-employed employee, or if you're having 1 or 2 employees, this would be a good strategy. At the end of the year, instead of giving in the January, I know at the end of the year, many people give, many business owners, small business owners, give bonuses in the month of January based on last year performance. Rather than giving in the month of January, if you can give the bonus in the month of December or at the end of the year, that will help to claim more deductions, and you are paying lesser taxes for this year.
Okay, so I understand, Andy. Definitely, that makes a lot of sense, because instead of looking for next year expenses, we can claim this year expenses, so that you know that you are paying less taxes this year, and you can plan next year when it comes.
Yes,
when it
correct.
isn't there. Okay, for many of us, taxes are already withheld, and definitely manaki most of the W2s, most of the employees, W2s, consultants, taxes are already withheld. Taxes cut అయ్యే వస్తుంటాయి కదా. So can tax planning be applied there too? Is it possible?
Yes, yes. So what I notice is, even the tax is being withheld through the through the W2 salaries, still many people pays a lot of taxes at the end of the year. As per IRS, you are expected or you are obligated to pay advance taxes throughout the year. But if there are some any capital gains, I notice this a lot in the bigger companies. So or if you get a RSU stock, or if you sell any stock, or if you do any if you have any capital gains taxes, you might not have done, there might not be appropriate and enough withholding taxes might not be there. So you might need to look into this and evaluate whether the withholding taxes, whatever done for this year, were they appropriate or not. If not, you need to do the payment before January 15th, those advance tax payments, so that you can avoid interest and penalty payments and when you file your tax returns. And specifically, I see this, people, most of our Indians do lot of stock trading. So they get capital gains, but they don't pay taxes on it. So that which will result in paying some interest and penalties for not paying the advance taxes on time. So if you are doing a lot of stock trading or stock transactions, security transactions, and you might need to consider paying some advance tax payments in advance, so rather than waiting till you file your tax returns.
Yeah, make complete sense, Andy. So can people who cannot itemize benefit from other deductions? Andy?
Yes, Andy. This is called above the line deductions. There are some expenses, so there are some line items where you can claim deductions even though you are filing standard tax return. An example, and there are few examples which I can go through that, but this is a very good strategy. Most of the people are not even aware that they can do like this. So because even people think, hey, I am going under standard tax filing, I'm doing a standard tax return filing, I don't have any deductions. No, that is wrong. There are some deductions which you can claim under.
Oh, okay. So can you give some examples of above the line deductions? And
Sure.
Something, yeah.
Sure. So there are deductions. There are some common. These are some. I say that there are some common and there are some uncommon. I shall say that IRA, which is very popular, but most of the viewers don't contribute for this. Individual retirement account, IRA contributions, and HSA, health savings account. If you do any HSA contributions, or if you do any IRA contributions, or if you pay any self-employment taxes, that also you can claim 50% of the self-employment taxes, whatever you pay, you claim it as an above the line deduction. And if you pay any bank penalties for the early withdrawals of early account withdrawals, which I'm not going in detail, but there are some lines at line. All these line items are called above the line items. Considering the shortage of the time, I'm not going in detail now, but we will cover some topics now in this call, in this session.
Yeah, sure. Sure, Andy. And what exactly is a HSA, Andy?
As I just mentioned, health savings account. It's one of my favorite tax saving strategy. Health savings account has triple advantage. Every family member can contribute up to $7,100 HSA contribution, and this can be directly. It's a flat deduction, and when you contribute to the HSA, you get a deduction, and it grows tax free. And you don't need to pay any taxes when it grows. When at the time of and you can use the money in the future at any point of time in your life. You can use it for your medical expenses, and you don't need to pay any taxes when you use HSA for medical payments, like maybe medical expenses or any procedures or anything medical related. You don't need to pay any taxes at the time of withdrawal also for the medical purpose. So it goes tax free. So you get a tax deduction. It grows tax free, and when you withdraw money to take care of medical expenses, again it's a tax free. So this is a very good strategy. I strongly recommend to all the viewers if they are eligible. There is a condition here. HSA account can be opened only if you have high deductible medical plan.
Okay.
So if you are unhealthy, then this is the one of the strategy you should consider, because you don't use HSA money by end of the year, you don't need to worry. You can roll over to the next year.
Okay.
So there is no rush to spend all the money before the end of the year.
Yeah, that's the beauty of the account, Andy, and it has a triple tax advantage also. We completely discussed about it in one session.
Yes.
So if anybody has missed it, please go back and watch those sessions. So you will completely know about how you can take advantage of HSA. So wonderful information you will get from those sessions. Okay, so can you please give your comments on 401k, Andy?
Okay. So as everyone, most of the viewers are familiar with 401k. 401k is a retirement plan. I recommend everyone first to check if your employer is doing any matching. If these are employer sponsored retirement plans, and if the employer is doing any retirement matching, please go and contribute and get that free money. That is your first step. After that, you can contribute up to $19,500 in a year, and it is $26,000 you can contribute if you are more than 50 years old. And once you contribute, and it grows tax deferred, and at the time of retirement, after you are attaining 59.5 years, you can access this money, and when you take this money, you are liable to pay taxes at those at that time. Whatever the tax rates are there, you are liable to pay the taxes. And I am not going in detail here because we covered few times about 401k in earlier TV shows. If you are planning to go back to India, still I recommend you to consider contributing to the 401k, because you are getting immediate cash return. You are going to save taxes on this your contribution. It can be 24%, 35%, 45% based on your applicable tax rates, state and federal together. So if you have, whether if you need to contribute or not, if you have any more questions, feel free to contact me. I'm happy to answer your questions and guide you appropriately.
Thank you so much, Anil garu. Winner kadandi. If you have any questions or any concerns, please feel free to call AG FinTax. So Anil garu will be happy to help you. It doesn't matter where you are calling from. And Anil garu, that's so nice of you, Andy. Thank you so much. So that is the big advantage that our viewers will get, right?
Yes.
Okay. So what about Rath 401k or IRA, Andy?
Okay. So as we discussed about the traditional 401k now, when you contribute to 401k account, you get a tax deduction. and it grows tax free. It is a bit different for the Roth. For the Roth 401k or Roth IRA account, when you contribute to the Roth 401k or Roth IRA, you don't get any tax deductions, but it grows tax free. And if you are in the lower tax bracket, and if you think that your income will be much higher in the future years, then I strongly recommend you to consider contributing to the Roth 401k or Roth IRA rather than traditional 401k or traditional IRA. It's a tax-free growth, and at the time of retirement, whatever money you want to take from this account, everything is a tax-free. It's a very good, great strategy. Many multi-millionaires or billionaires follow these strategies.
So that when you withdraw the money, you don't have to pay tax. And
Yes.
at the same time, growth is also tax-free, right?
Got it. And just I want to add one more. Recently, we have done how to become tax-free millionaire with a Roth IRA account. You can just go and watch our previous live show. So where I covered from age level at what age you are, how much you need to contribute to hit $1 million tax-free retirement by the time of retirement. So it's a very good one, and I recommend you to go and watch the video.
Yes, and so in those sessions you explained even dollar amounts also.
Yes.
How much, what age if you contribute, how much dollars, and how much you'll be able to take at the time of retirement.
Right.
So that was also the wonderful session, Andy. And definitely, if you have missed it, please don't miss it. Go back to the YouTube or whatever the channels. So wherever the TVASIA Telugu is available, please don't miss to watch these sessions. You will definitely get benefit out of it, and I am very sure about it. So thank you so much, Anil Garu. You have done so many shows which are really useful for any individual or any business owner who has to file the taxes, no matter what.
Yes.
So that's a wonderful, and about you just explained about 401k and IRA, right? Roth 401k and IRA. So how does a backdoor Roth IRA works, Andy? So what is a backdoor Roth IRA ante kuda meer intaku mundu chepparu. Explain one more time.
Sure, Andy. We covered this topic few times in our earlier shows, but there are some limitations to claim tax deductions for your traditional IRA contributions. So if your income is more than $206,000, and in those cases you cannot contribute to the Roth IRA account directly, or you cannot, even though you contribute to the traditional IRA, you don't get the tax deduction. So then why do you need to contribute to the traditional IRA account if you don't get the tax deduction? Because you should contribute, because you can convert your traditional IRA account to the Roth IRA account, and it is called backdoor Roth IRA. Directly you cannot contribute to the Roth IRA, because if your income is more than $206,000, though in those situations, what you do, contribute to the traditional IRA account, you don't get any tax deduction, and you don't need to worry, and convert to the Roth IRA next day. So from there, it grows tax free. You can contribute $6,000 for you. You can contribute for your $6,000 for your wife, even though your wife is not working. So every year you can contribute $12,000, and if you are more than 50 years old, you can contribute to $14,000 together. This entire $14,000 can be converted to the Roth IRA account on the day 2. Day 1 you contribute, day 2 you convert to the Roth IRA account. So then it grows tax free, which is a very good strategy. I think you should consider if you are a high net worth individual.
Yeah. This is one of the biggest advantage for the high income individuals or business owners also, right, Andy?
Yes.
So you can take this.
Anyone can contribute this one. Yes.
So you can take a big advantage of this backdoor Roth IRA also, Andy. So please don't miss this also. So, and next, can we set off the capital losses with gains to save on taxes, Andy?
Yes, and this is called this strategy is called capital tax loss harvesting. Generally, what people do, if you are an investor, if you are a stock market investor, if you invest money in the stocks or securities. It is very common. Stock price goes up and down, up and down. So when the market is down, when your stock price is down, what you do in general? You wait and watch when the price will go up again. So if you are in that situation, I strongly recommend you to consider to selling that red colored stock which is at losses. With this, you are accounting or you are booking a capital losses when you sell the stock. These losses can be adjusted with your any capital gains if you have. If you don't have any capital gains, you can adjust with your W-2 salary or any other business income up to $3,000 per year. Okay, what you do with the balance loss, just only $3,000. Nothing to worry. It will be carried out to the next year. So before this year, if you have any stocks in the red, please consider selling the stock to book the capital losses. One point which is very important you need to know is wash rule. You are not supposed to buy the same stock within next 30 days. You can buy after 31st day or from 31st day, but you are not supposed to buy the same stock within the 30 days if you are booking any losses from the sale of the stock.
ఎక్స్చేంజ్ ₹8,000 బ్యాలెన్స్ మ్యామ్.
ఇవ్వనక్కర్లేదమ్మా, 8,000 మీకే వస్తాయి.
ఎస్ మ్యామ్, మేము కేవలం హాల్మార్క్ 916 గోల్డ్నే అమ్ముతాం. ఇంకా మీకు దొరికింది 100% ఎక్స్చేంజ్ వాల్యూ.
క్వాలిటీ, ఇది మలబార్ ప్రామిస్. ప్రామిస్ ఇస్ ఎ ప్రామిస్.
ఇది మా హీరో అల్లుడు కోసం ఫిట్ గా ఉంటుంది.
పర్ఫెక్ట్ గా ఫిట్ అవుతుంది. ఇది మైండ్ డైమండ్, 100% క్వాలిటీ.
సార్, ప్రతి మైండ్ డైమండ్ న్యాచురల్. ఇంకా మేము 28 క్వాలిటీ టెస్ట్లు చేస్తాం.
28 టెస్ట్లా?
ప్రతి డైమండ్ జ్యువెలరీతో పాటు ఇంటర్నేషనల్ ల్యాబ్ సర్టిఫికేట్ కూడా.
కళ్ళు మూసుకుని మీ హీరో కోసం వజ్రాలను తీసుకోండి. ఇది మలబార్ ప్రామిస్. ప్రామిస్ ఇస్ ఎ ప్రామిస్.
So there are some rules to follow, right? And when you are trying to take advantage of when you are trying to set off your losses with gains, so you need to follow some rules when it comes to stocks trading. So please watch. I think we did one show on that also, Andy. So please go back and watch. So you will get all the information, whatever you need, Andy, for tax planning. So all you have to do is log into those sessions and just watch it.
And when we covered few strategies earlier in different shows, but I'm just summarizing all those important points into this session so that viewers can take advantage.
Take advantage and go back, and you can especially watch the particular topic also, so that you will come to know a lot of other information also.
Yes.
So most of us donate at the end of the year or throughout the year. So the standard deduction is 24,800, right? So
yes, correct.
Of married, if
married
it is being filed, married filing jointly status.
Correct.
So some of us might miss exceeding that amount by just a few $100 and few hundreds. It might not be a much difference.
Correct.
In order to qualify for itemized deduction, any tips on how to qualify for itemized deduction?
Okay. So what happens is, because Thanksgiving time and this is a Thanksgiving month, many of the viewers might be doing a lot of contributions, charitable donations, helping many organizations. Okay, but when you think about all these amounts are might be smaller to claim deductions, because you can claim itemized deduction. Sorry, you can claim charitable donations as a deduction only if you do itemized deductions. But to qualify for the itemized deduction, you need to have expenses for more than $24,800, as we discussed earlier. There are different things, mortgage interest, or charitable donations, or property taxes to the maximum of $10,000, and any natural disaster expenses. All this together, if there are more than $24,800, then only you can claim itemized deduction. So if you do the small contributions, what I recommend you, consolidate or bunch your deductions. Like example, every year you are contributing maybe $1,000. In the next 5 years, you contribute for the next 5 years charitable donations in this year, which is a $5,000. So bunch all your deductions over the years and do the contribution. Like example, you do the contribution this year and don't do any contribution for the next couple of years. It's you're bunching all those deductions. Or just do for a couple of years, do the bunch of the deductions and add those deductions with your mortgage interest. It may exceed $24,000, $24,800. And there are many times viewers come to me, my clients come to me and say that I am almost $23,000. I am missing the itemized deduction. What shall I do it? I say that if you would have reviewed this before December 31st, and if you had done some charitable donations, you might be eligible for itemized deduction. So bunching of deductions, you are increasing your charitable donations by bunching different years of contributions. So this one strategy you could have considered if you are in the border for $24,800 and if you are missing the itemized deductions advantage.
Makes sense, Annie. So can you please tell us other new strategies which not many of us might be aware of?
So now I would like to cover one very good strategy, which is a real estate professional. As most of our viewers are Indians, our Indians do investment in two places. One is in the stock market, one is in the real estate. Stock market, we had a separate sessions on how to handle capital gains and everything in earlier sessions. And for the second one, now in this point, I want to focus on the real estate investors. So if you are a high real estate investor, if you have a lot of money and if you are doing heavily on real estates, what you do with the real estate losses? You might have given your property for rent. Most of the cases you have a real estate losses when you file your tax returns, which are considered as a passive losses. Those passive losses cannot be adjusted with any of your active gains or active income, which can be W2, which can be a business income. So then what you do, every year you are carrying over this passive losses year on year till you sell the properties. Rather, you can adjust these passive losses with your active income. This is called if you are a real estate professional only. How you become a real estate professional? I am not talking about real estate agent. Real estate professional is different. If you are spending approximately 700 hours in a year, on real estate activities, 750 hours on a real estate activities, and there are some other conditions are there, and if you meet all those conditions, then you are considered as a real estate professional, and there are no restrictions for you to adjust your losses with any of the active income.
So even if it is in the family, like the husband might be the real estate professional and wife must be working somewhere else, right? So still they can
Yes,
write off that. Okay. So how can one become a real estate professional?
Yes, as I said, real estate professional is a very good tax advantage tip. Most of the people don't know this. How to become a real estate professional? There are two major tests which you need to meet. Number one, you need to spend at least 750 hours in real estate activities for your properties. So what activities? It can be looking for new tenant, take care of your house, cleaning, house management, or repairs and maintenance, any of those activities. One house is considered as 100 hours, equivalent to 100 hours maintenance as per IRS regulations. If you do any major home improvements in this year, then the number can be more than 100 hours. But you need to maintain all your documentation, how much number of hours you spend for your properties. This is the first test. The second test, you need to be actively participation. Like you are expected to work more than your regular job. So if you are a part-time employee, if you or your spouse is a part-time employee somewhere, or if your spouse is not working anywhere, then this could be a very good strategy to consider if you are a real estate investor. So, and if you are not a real estate investor, you might be having only 1 or 2 properties. This could be your future tax planning tip, where you need to build your real estate assets so that you can claim all your real estate passive losses with your active incomes.
Okay, that makes sense. Yeah. So this is one of the strategy. I think it takes time to build up, because you need to qualify for some certain number of hours, and you need to qualify for those rules to take that advantage. So,
and there are many investors or viewers already there, and who has heavy investments in the real estate, but they are not claiming these advantages. So
please make sure, Andy, you are taking this advantage. Maybe you might not know about it before, but it's definitely, this is something you need to know about. And so please log into before sessions, and you can watch all the information. And please feel free to call AG FinTax. Anil Garu is very happy to help you, and that's a privilege. Please feel free to call if you have any questions or any concerns regarding your tax planning strategies. Okay, and the next వచ్చేసి, this is indeed a great strategy which will come in handy to many. Definitely, and becoming a real estate professional అనేది. So what is the next strategy that you have for us, Andy?
The second one which I want to cover about oil and gas deductions.
Okay.
So this also many people don't know this. You can adjust. Okay, what as per section 263 of tax code, if you invest any money for intangible drilling cost, you can claim 100% of your investment, which is allocated to the drilling cost. So typically, on average, based on my experience, what I see, if you do any investment for an oil and gas opportunity, 65 to 90% of your investment is categorized as a drilling cost. So this amount can be deducted 100% in the year you contributed. 100% you did investment. The balance number, whatever that, it can be 10% or 20% or 30%, which is considered as a which is considered as a tangible asset. So this is depreciated over 7 years. So whenever you do the investment, there are 2 parts: drilling cost, which can be 65% to the 90%, and the tangible item, it's called a tangible asset, so which can be 10% to 35%. Each investment opportunities are different. Each company offers in a different ways. So there are a lot of oil and gas investment opportunities are there in the market. You can consider investing this money, and whatever you contribute, you claim whatever the deductions you get from these because of these investments. This can be adjusted with your W2 income. This can be adjusted with your business income. This can be adjusted with your capital gains. So any incomes can be adjusted if you do the investments in oil and gas. But the point to be noted here, oil and gas market has a fluctuating market all the time. Right now, the barrel cost of a barrel oil is $40 plus, and at this rate, the rate of return might be in 3 to 4 years. You might be getting back your investment through tax savings, and also you will be getting positive cash flow every quarter and quarter. As they generate the revenue, they share some percentage of the revenue to you because you are the investor. So this is also not very popular. Many viewers don't know this, but there are a lot of oil and gas opportunities out there. If anyone wants, if you are looking for opportunity, oil and gas opportunity, I'm happy to connect with the right companies who are offering these benefits.
Thank you so much, Andy. That's also like very useful, and this is something that people should know, like maybe who are paying a lot of taxes, so they can take advantage of this oil and gas investments also. Okay, so are there any requirements to meet to invest in oil and gas?
Okay, so we need to, whenever a taxpayer is investing in oil and gas, okay, they need to ensure that they know all the details, like how much, what could be the percentage of the drilling cost, how much, what is the percentage of the tangible assets. They should be aware, and they should also acknowledge that there is a fluctuation. Always there is a risk of their investment, because the drilling has to, after they invest, how does this work? Oil and gases, first they pool funds, maybe some hundreds of millions of dollars. They pool funds from different investors. Once they get all the funds, then they will go and start drilling the wells, and they should generate, the production has to start, the drilling work has to start within 90 days from the close of the tax year. Like example, now I know many investors are looking for funds. They already have wells, they got all the approvals from the departments, and just they're waiting for the money from the public so that they can spend that money in drilling the wells. So but the drilling should happen within 90 days from the end of the close of the year. So there is a risk here. So if you need to ensure that you are working with a very good company who has a lot of experience in this industry. If there are any new investors, new companies are there, and if you invest, if they are not able to start the drilling of the wells within 90 days, you will lose the opportunity to claim deduction. So be very selective when you are selecting the oil and gas company to invest.
Okay, nice. When you explain this, that reminds me of opportunity zone investing, Andy. So please explain that also.
We covered this opportunity zone investing in our previous sessions, how to reduce capital gain taxes. So people can go through there for a detailed conversation, but at a very high level, I will cover the topic here. If we have any capital gains, you have an option to invest the capital gain amount in any opportunity zone fund, and you can defer your capital gain tax payments now. So what is this opportunity zone fund? Opportunity zone fund is a fund which invests in a opportunity zone. It can be to opportunity zone to bring substantial economic benefits. It can be a land, it can be an oil and gas, or it can be a solar, it can be a wind. Any of those investments can come under opportunity zone investments, and there are many opportunity zone funds are available in US, and 18% of the land is in United States is categorized as opportunity zone, opportunity zone. So there are many investors are there. There are many developers are there who are developing this land, and they are bringing substantial economic benefits to the place. And if you invest in those funds, you can defer your taxes till 2027. So you need to hold these investments for at least till the period December 31st, 2026. then you can pay the taxes in 2027. And when you do the payment in 2027, you can get 10% of your capital gain as will be reduced, or like it's a forgiven by 10%. The capital gain tax will be forgiven by 10%. So instead of paying, example, if I need to pay $100,000 as a capital gain now, I will be paying only $90,000 in the year 2027 as a capital gain taxes. One is deferring the taxes. The second advantage is my total tax liability of capital gain will go down by 10%. And there is a third advantage. If you can hold this investment for 10 years at least, then if you make any capital gains on the land where you invest or in any opportunity zone, and if you make any capital gain on that zone, that is also completely tax free. So you are deferring your taxes till 2027, and if you hold the investment for 10 years, then you don't need to pay any capital gain taxes on the opportunity zone investment. Also on the opportunity zone, it can be a land, like example, a land got economic development, but you don't need to pay any capital gain taxes on that growth of the land value.
Oh, that's so great. And actually, so definitely, if anybody is paying a lot more taxes, definitely they can plan and they can look for opportunity zone investments. Definitely. So, like opportunity zones, and is there any other federal credits in any other federal credits?
Yes, Andy. There is one I would like to mention about investment tax credit. If you do any investments in solar energy systems, then you can claim 26% of the cost of the installing. You can claim it as a deduction, Andy, and you can get an ITC, a investment tax credit. So you might be seeing many homes have solar panels on their home, and it's called residential solar panels. So if you do any of those in those investments, you get a 26% credit. You get it in the year you invested.
So only 1 year and you can take any advantage.
No, the investment is only 1 year, so you get a credit only in that year only. And this option is available only till 2021. After that, there is no more investment tax credit.
Oh, so okay, that's nice, and as it will help save a lot more on power bills over a period of time. Yes. Because we use solar energy.
Correct.
To lighten up our house, we can say that. So education is one major expense of many, and chala mandi kids education and chala ante hadavudu padipotha untaru when while small unnappudu nunche. I'm sure there might be definitely some tax benefits and savings of children's education, and can you explain those?
Sure, Andy. So you might have heard about 529 plan, section 529 plan. So how does this work? You can contribute to the 529 plan, and some states allow tax deduction for this 529 plan contributions. And not every state is offering, but if you invest money in your the 529 plan, you can get a tax deduction. And when you withdraw this money for your kids' education purpose, then you don't need to pay any taxes. 529 plan has pros and cons. I'm not covering this in more detail, but from the tax perspective, whenever you contribute to the 529 plan, you do get tax deductions. And so this could be one, and every state is not allowing this. Please check with your state first. If your state is allowing this deduction, then definitely you should consider whether 529 is a good investment option for you or not. And please talk to your financial advisor on this topic, because it has pros and cons on this 529 for 529 having a 529 plan.
Yeah, but as you just said, correct me if I'm wrong, so there is only state tax deductions in Andy. There is no federal tax deduction on 529.
No federal taxes. No, there is a very good question, a very good point, Andy. There are no federal tax deductions for this 529 plan contributions.
Okay. So we don't get any federal tax advantage, but some states allow tax deductions and 529 contributions.
Yes, you are right. Correct.
So, do you have any tips on how to save taxes for people who do a lot of charity? And before that, I would like to ask you, suppose 529 గురించి చెప్పారు కదా. So, is there any other substitute plans for 529? I'm not talking about taxes or anything, but I just want the viewers know if there are any other substitutes that they can think of at least.
Okay, yeah, and there are different ways are there, but considering the shortage of the time, I don't want to get into that. I don't want to. There are, and as I said, please talk with their financial advisors, and because when we recommend a plan, we need to consider what is their financial position and what is their future plans. When the kids are going to college, how many years of age they have in the hand, and are they looking for any financial aid? Those are the different key parameters that we need to consider. So I would like viewers to take with their financial advisors. So yeah.
Yes, Andy. So because this is the question a lot of people gets most of the time, Andy. So I just want to make it clear. Yes, there are 5 substitute plans to 529, Andy. So please talk to your financial advisor and taking a lot of factors into the consideration, and based on those facts or based on your long-term or short-term goals, yes, you can have some other plans for education purpose. So do you have any tips on how to save taxes for people who do a lot of charity?
Okay. So here I would like to talk about donor advisory fund. So donor advisory fund is it works with okay. If you want to do any contributions to any 501c3 non-profit organization, you get a tax deduction, which everyone knows. But if you are not very sure to which 501c organization you want to contribute right now, so then what I recommend, open a donor advisory fund and start contributing funds this year, and you don't need to confirm to whom you are going to donate this money. Every year you can just continue to contribute to the donor advisory fund this year, next year, next year, next year, and once you reach your goal of money, then you can go and do some very good charitable activity. You can do it. Or if you want to support your village in India, or if you want to support a temple, or if you want to support a church, anyone, instead of giving a small amounts, if you think that it would be better if I give a bigger amount, so, or if you want to help a non-profit organization at a bigger level, so then it would be donor advisory fund is very recommended approach for you. Every year you contribute small number, and you get a tax deduction for that, and you don't need to decide now to whom you are going to donate this money.
Okay. So donor advisory fund annaru kada, and how can they contribute to the donor advisory fund, and is there a way to contribute?
Yes, and there are many online websites offer this donor advisory fund. Even Fidelity, Vanguard also offer this donor advisory funds. And you can just Google it, and there are many companies offer this online account. You can just online account, you can do the transfer.
So once it is being contributed to the donor advisory fund, can they invest that money or no? They cannot touch that money.
No, they cannot touch the money. Once it is contributed, then they cannot touch the money.
Okay, Anil, so we have discussed so many things and so many tax planning strategies for individuals today. So we're almost towards the end of the show, Andy. So any other final tax planning strategies for individuals?
As I think we covered all strategies in detail, and what I would like to mention again here is, please don't delay thinking about the taxes till you file your tax returns. This is the time before December 31st. Please consider, think through how much taxes you need to pay. Have you done enough withholding taxes are done or not? If not, please go and do the payment of withholding taxes or do the advance tax payments. You can go to the IRS website and just do the advance tax payments. You can do that for this tax year, so that you can avoid interest and penalties. And talk to your financial advisor or tax planner or a tax accountant or your CPA and ensure that you are optimizing your tax strategies. And reach out to me also directly. We do also offer a free tax planning session for the individuals. If you are available, please come and talk to us. You can send an email to me or call our office. We can schedule a meeting for you, and we are happy to help you. Thank you Andy. Thanks Lakshmi garu, and thanks TVASIA for this.
థ్యాంక్ యూ సో మచ్ అండి. సో దిస్ ఇస్ ఎండ్ ఆఫ్ ద షో. నెక్స్ట్ వీక్ మళ్ళీ మనం ఒక కొత్త టాపిక్ తోటి మళ్ళీ కలుద్దామండి. టిల్ దెన్ హ్యావ్ ఎ వండర్ఫుల్ వీక్ అహెడ్ అండి. థ్యాంక్ యూ సో మచ్. బై.
Thanks Lakshmi garu. Thanks Andy.